Hi, everyone. I'm Mike Gassewitz, CEO of IAIC, and welcome to another episode of In Focus. Today, we're going to talk about the second quarter, call it a second quarter analysis of our industrial sector, all part of our QSECT investment approach. Joining me today is Mike Williams, our portfolio manager responsible for this sector. Welcome, Mike.
Thanks, Mike.
So just a reminder, everyone, what subsectors, so to speak, are encompassed in the industrial sector. It's agriculture, transportation, manufacturing, and technology. So, Mike, why don't we start with manufacturing? What did we see in the quarter?
Sure. Well, even within manufacturing, our subsectors are quite broad. We have automotive, we have heavy industrial, we have aerospace there. So what we have seen in manufacturing basically is a period now of catch up from supply chain shortages. We're also seeing, though, that companies in this sector are needing to absorb higher prices, higher input costs. So margins are definitely being squeezed in this area in some cases, but there is some pent-up demand. That some of these companies are definitely seeing a surge in sales due to the fact that they couldn't get product out the door in the previous year. They're starting to catch up to that. However, on the other side, we are starting to see some demand for the output soften a little bit, particularly, say, in the automotive sector. We had empty car lots in 2022. We're starting to see those lots fill up, and consumers get a little bit more apprehensive about making large purchases given the state of the economy right now.
As someone who's just purchased a new car, I couldn't agree more. Yeah, you're starting to see inventory on the lots. You can actually start to negotiate again on some of these cars. So totally agree.
Exactly.
Okay. What are we seeing in the agricultural side?
Well, the agriculture side has been really interesting. As most people are aware, commodity prices, food prices have spiked. They really spiked last year with the outbreak of hostilities in Europe. Corn, soybeans are off their highs of 2022, which is the output that farmers are paid upon. However, they still remain relatively high relative to pre-COVID prices. On the other side of things, though, fertilizers, which spiked tremendously, up about 800, 1,000% at a peak during the outbreak of the war. We've seen those fall to levels that are pre-pandemic. We see two things happening here. As a result, farm receipts are healthy. The equipment side of it is going very, very well. One of our core picks, John Deere, is one of our best performing stocks over the long term, and their orders are up, their margins are up. On the other hand, the fertilizer producers, and one of our core picks is Nutrient, which is the amalgamation of Agrium and Potash formerly. They saw their fortunes really surge last year, but fall off quite significantly this year. So we've seen John Deere go one way on the manufacturing side, equipment side, and we've seen the fertilizer producers go the other way.
Okay, let's talk about transportation. What are we seeing there?
Well, in transportation, and really transportation is a really a bellwether sector for the economy in general. When we see volumes increase or decrease, it gives us a good indication of the current state of the economy. And these companies, they'll put out their forecast. That gives us a good idea as to where they think the economy is going. And what we've seen is some softening in this sector. Prices remain high. The stock prices remain high, but we see volumes down. We see margins being squeezed somewhat. Most of our transportation is focused in railroads. And again, in railroads, in every subsector of railroading, whether it be intermodal, coal, oil, chemicals, automotive, we've seen softening of volumes there, which is indicating the economy has pulled back somewhat year over year. FedEx is doing very well, but again, they're starting to see some softening in demand compared to their pandemic demand that they saw, and yet that company, the price is surging on that. We think that some of the stocks in this sector are a little frothy right now, a little overpriced. Right. That may be an area where we're taking some profit.
Yeah, no, makes sense. And then last, and I know it's not a big sector for us, so to speak, but technology.
Well, technology, we do encompass it under the industrial sector, in that a lot of technology is business to business interaction. So, but technology, we do play in that space. Technology is becoming a larger and larger part of the economy, and ignoring technology, even though we're value-based and we're more comfortable with extrapolation of past results rather than trying to predict, large future cash flow gains. To ignore technology would be like ignoring railroads in the 1880s or the automotive sector in 1920. Right. Technology is expected to grow to be a dominant piece of the economy by 2030 to 2035. So, but the way that we play this sector is we tend to invest in large cap, well-established companies that are some of the biggest in the world right now. The Microsofts, we've just added Google recently. Visa is another one that we invest in, Apple. We also invest in a basket of technology stocks through exchange traded funds. And that way that we've got that exposure to the sector, and we're not taking any single large bet on a relatively new company where those cash flows are unknown. But the sector itself saw the largest pullback in 2022 due to the uncertainty of the economy, but probably more prominently rising interest rates. The valuations of these companies are predicated on future cash flows, and rising interest rates hit those cash flows harder than they do near-term cash flows. So we saw the largest pullback there. What have we seen in 2023 in the first half? That sector has probably done better. It is the best performing sector out of all the GICs. And at this point, we have to keep in mind, though, that it is coming off a relative low of 2022. It is back to where it was right now. It has done very well, but it has been very volatile. We expect to continue to invest in it. We expect to continue to grow our positions in this. We're still underweighted relative to the broader economy, but we're going to move that needle a little closer to that representation as we go forward.
And that's a great summary. For folks listening to the podcast episodes, we had a great episode with Grayson Vector as well on that, where he went into detail on the tech sector and exactly what you were saying, that we're looking to grow that as time moves on. So that's a great summary in terms of what we saw in the last quarter. Any thoughts about looking forward?
Yeah, I mean, we're always trying to use a crystal ball, and sometimes we're good, sometimes we're not. But obviously, the dominant feature right now is inflation and interest rates, and the reaction of the central banks to tackling inflation and getting the economy, bringing the economy to a soft landing right now. That is going to be very dependent then. How that turns out is going to be very dependent upon the future of those various subsectors. Obviously, interest rates are very important. They impact the cost of capital, which is heavily used in manufacturing. They impact valuations. Inflation itself creates uncertainty in the economy. What we see right now is purchasing managers are a little bit more cautious. They're seeing orders soften, whereas we've got a consumer that is very optimistic despite some some tightening of jobs. The jobs are not as available as they were in 2022, but we see a very confident consumer, but we see purchasing managers urging some caution right now. So going forward at this point, it's a mixed bag. We're watching very carefully where interest rates go and inflation goes, and I think that will tell us whether we're going to see a stronger market over the next 12 months, or we're going to see it remain flat and uncertain. So we watch those movements very, very carefully, basically week to week.
Okay, Mike. Well, thanks for this.
Okay. Well, thanks for having me, and we will talk to you again next quarter.
Exactly. As always, folks, if you have any questions, don't hesitate to reach out to your accounting firm financial advisor, or feel free to reach out to myself. And as always, feel free to chat with your IAIC portfolio manager. Thanks for listening. Bye-bye.